Hey, YouTube family, welcome to another Kevin Strong show. And in this video, we're going to talk about a Redfin article that's basically talking about how the home market is stabilizing to pre-pandemic levels. We're also going to look at some stocks, specifically Zillow stock. I talked about that last week. We're going to look at Redfin stock and a home buyers index stock. I'm actually going to start something April 1st. I'm going to take a little account, just a couple $1,000s, and see how much I can grow it. And I'm going to take you guys along the way and give you access to real numbers, what trades are working, what trades are not. Obviously, this is not financial advice, but I think it would be very interesting content to add to my channel, and hopefully it will help my subscriber base. So once again, if you're new, I ask you to start off by smashing that like button. Basically subscribe so you are notified when I do release my videos. And yes, I did not decide to wear a hat today, so you get your BBC, bald, black, and confident. So without further ado, let's go ahead and jump over here and get into this article because it has some interesting information about it. Like I said, the title of it is Redfin Home Price Index. Prices rose 0.6% in February, marking return to pre-pandemic norm. So basically what they're setting up with this article is that while mortgage rates remain elevated, they are not as volatile as they were at the height of the pandemic, which has helped stabilize home price growth. That may be true, but that still does not mean that the average home price in your particular market is affordable. See, once again, you have to read between the lines. Redfin obviously is a real estate company. They're based out of Seattle, Washington. So at times, some of the data and information that they put out is somewhat subjective. Some of it's accurate, but some of it is questionable. I would push back on this and says, okay, home prices are going up in aggregate in most, I think 45 of the 50 major metropolitan areas in the United States, but that doesn't mean affordability. Once again, sales volume. Everybody's focusing on inventory, but what about sales volume? Inventory can go up, but unless prices come to a point where the average buyer not only can afford the home, but feels confident that is a good time to purchase that home, inventory in a vacuum is not necessarily the canary in the coal mine to determine whether or not home prices come down nationally. So we're going to jump down here and just look at some of these major cities that Redfin has laid out here. This is basically Redfin's home price index. MOM is month over month, and then Redfin home price index, the second column is YOY, year over year. So I am a component of month to month. I think that's more of a leading indicator. The year over year numbers kind of looking in the rearview mirror. A lot of things can change in 30 days. As you know, a house could have a value of $550,000 4 months ago, but if a house similar that recently sold for, let's say, 500 or 490, that's the new price line. That's the new baseline that the appraiser is going to assess in terms of establishing a value in a particular housing market. So month over month is a little bit more accurate. My actually old stomping ground, Cleveland, did quite well year over year, which I say you take that with a grain of salt, but it is up month over month, 0.69%. I'm just going to scroll down here so you guys can take a look at this. I'm also going to put this article in the description of this particular channel so you can look at all of this a little bit more in detail. I think Portland was down, if I'm not mistaken. Yeah, they're down a little bit, 0.10%. And then Seattle is up 1.37%. And year over year, it was 8.72. So very, very, very interesting situation. Like I said, the article talks about Portland right here. Home prices have somewhat plateaued, and everything is market dependent. Everything is really, really market dependent. I'm still going to go by my last comment that I said in my previous video talking about, yes, I have changed my narrative from being a crash bro, as they call them, as to everything is market dependent, but notwithstanding a black swan event, I do not see in aggregate a housing crisis like we had in 2008, where in aggregate, I think it was around almost 30%. That will happen in certain markets. Austin's getting hit pretty hard right now, but overall, I just don't see that going down that way. So here's where prices fell in 6 metros, okay? So as you can see here, Tampa, Florida, San Diego, Charlotte, Portland, as we talked about, Fort Worth, Houston. Texas is getting hit pretty hard because Austin is getting pummeled pretty bad. And then it says, likely soft in Texas and Florida is part because of those 2 states have been building a lot of homes. That's true too. That's true too. On a side note, the commercial aspect in the Seattle area, I think is going to be in for a very, very long headwind because we've got a ton of inventory coming on for multifamily in the Seattle area. And our absorption rate, for some of you guys who are out there who follow commercial, our absorption rate is very slow, which basically means it takes a while for us to get through that inventory. So I think we're going to have some very, very choppy price compressions when it comes to commercial real estate in the greater Seattle area. And here's a better look at those data points that we were looking at earlier, month over month, year over year. This is probably a cleaner look at this. So once again, I'll let you guys take a look at this. But once again, I will put this in the show notes. There's Seattle, 8.7, 1.4. DC, 0.8% over. So very, very interesting information. Now at this particular time, we're going to slide over and look at some actual stocks in terms of Redfin, Zillow, and things of that nature. And like I said, starting April 1st, I'm going to start this unique journey of starting this account with only $2,000, not a lot of money. And we're just going to see from week to week how I'm growing it. And I'm going to basically do my own videos as I do now, share some content with you, hopefully make you laugh. And then at the end of the video, start talking a little bit about how I'm growing my account. I think it's incumbent upon a lot of people to learn this skill set. It is not easy. I've lost a lot of money and I've made some decent amount of money, but I think it'd be a unique component to the show, and then hopefully you guys will enjoy. So let's see here. Can you guys see that? Let's see here. Yeah, you can. Let's see if there's a way for me to make it bigger. No, not that way. All right. So let me go to this chart, and we're going to start off with Redfin. So as you can see here at the top, this was January 9th, basically at the beginning of the year. Redfin was trading at about $10.38. And it had slid all the way down as of March 25th to 569. So 569 where it was at, and it was basically as high as at the beginning of the year. We're going to say, what was that, $10? So you can see huge decline, almost a 50% decline. These little lines, these trail lines here, you see an orange at the top, an orange at the bottom, and a red in the middle. That's something called a Kelter channel. For those of you who don't follow stocks, don't worry about it. But basically, it stays in the channel for the most part, with the exception it went out of the channel in December of last year. And since then, it's been kind of staying in the middle. So I think Redfin has a lot of choppiness moving forward. Just basically looking at things like this, it's well off its 52-week highs. How all of this is going to impact its bottom line in terms of the pricing model, that no longer the seller's responsible for paying the buyer's agent's commission. That's going to basically put a lot of pressure on the housing market overall. How that will impact companies like Redfin, who was already set up to be a discount broker, could be a tailwind instead of a headwind, but only time will tell. So let's take a look at Zillow. And remember, I told you guys when the settlement came down, that NAR had to pay, I think it was $418 million. I think I said 410, and the stock had dropped 14% in one day. Once again, you see the channel, but giving you guys just some basic technical analysis here. As you can see, I'm running my mouse across this top channel, and now I'm running my mouse at the bottom channel. So for the longest, since January of this year, Zillow was operating in this channel, following my mouse. When it finally broke this channel, this is what a technical analysis is. You take the top of the channel, which is about 56, and you take the bottom, which is about 51. And the difference between the top and the bottom is about a 5-point stock swing. So when this thing broke out a channel, the difference between the top and the bottom is typically how far the stock's going to drop once it breaks out of the channel. So let's go ahead and verify this hypothesis. So it breaks the bottom one, and look here, right at 47. It was at 51, almost 52. Take 5 off that. What do you get? 47. And then it stabilized itself, started a new support level, and started to creep up. Now, Zillow is still well below its 200-day moving average, so I would not be in this trade long. I would have what's called a stop loss on this. You get in and get out real quickly, or do it from a day trade. But just the basic analogy of how that all sets up. And finally, last but not least, let's look at the home buyers ETF. So as you can see here, since, let me go beginning of the year here. Since January of this year, the home buyers index has been relatively stable and is riding on the top end of, quote unquote, the Kelter channel. So what does that mean in layman's terms? The devil's in the detail. These new home builders are continuing to come up with these new incentive plans, buying down rates that are allowing people to get some of these mortgages, below, 5%. They're coming up with these massive concessions. And ideally, in Fannie Mae and Freddie Mac guidelines, those concessions should reflect the real appraisal price of the home. So what do I mean by that? If the house is new construction and it's selling for $600,000, and you get $50,000 in concessions, the price really should be $550,000, not $600,000. So they're kind of playing with the numbers, which is also pushing up home prices and keeping the overall housing market stable. How long will that last? Who knows? The devil's always in the details. So once again, stay tuned next week, because I'm going to do a little bit more information about this small account journey. I'm going to give you access to my account. I'm going to start off with $2,000, and then April 1st is when we're going to kick this thing off. And as promised, every week I'm going to give you a video and also give you insight to how I'm trading this small account and how large it grows. What are my expectations? Who knows? But I would like to see it over 4 or 5 months to take a $2,000 account and get it well over $15,000. But we will see. So that's going to do it for this particular episode of the Kevin Strong Show. I hope you're enjoying my content. Please do me the honor of hitting that like button before you click off the video. If you have not subscribed, I ask for your hand on the subscription button only. And I'm also going to put my email address in there, because some of you guys DM me on Facebook like, hey man, I don't know how to get in contact with you, or if I have some questions. Once again, I am not a financial planner. I'm a licensed real estate agent, inactive license when it comes to being a loan officer. And I am very well skilled and active when it comes to debt consulting, basically getting creditors and attorneys to take pennies on the dollars. And I'm really, really good, believe it or not, at car modification, which is something that I have recently launched. And I'm getting phone calls every day, helping people restructure their automobiles loan. So thank you for watching this edition of the Kevin Strong Show. I'll see you guys in the next video.